This is a story of three seemingly identical companies. All three were founded by brilliant people with superior technical knowledge in their particular field of interest. As these three companies start out, they all decide to pursue government contracts to help finance the development of their products and services. All three of the companies were successful in bidding on and winning a Phase 1 SBIR contract. Let's take a look. This is Company A, headed by Bill, a PhD with a brilliant idea. Bill decided they were small enough and Bill was smart enough that he could take care of the accounting himself. Why hire somebody to do a simple task? By doing it himself, he will obviously make more money in the long run. Besides, he is so small, he really can't afford to pay anybody to do this for him. This is Company B, headed by Debbie, who is also a PhD. Debbie has a brilliant idea but realizes that she doesn't know anything about accounting. Company B decided they needed to hire a local CPA and bookkeeper to do their books. The firm hired is expert at doing accounting and bookkeeping, but they are not familiar with the federal acquisition regulations, the DCAA, and other government contracting requirements. Since they are experts at accounting and most government requirements are listed as public knowledge, they feel they can perform the job for Company B. This is Company C, headed by John, a well-respected scientist and PhD in his field too. John had worked on a subcontract to a large government contractor while doing his postdoctorate work. So he was familiar with some of the regulations associated with government contracting. John decided they also needed some accounting help, but due to past experience, he decided they also needed expertise in government accounting procedures in accordance with the DCAA, the FAR, and GAAP requirements. So they hired Reliascent to be their outsourced accounting department. The revenue for all three of these companies in Phase 1 is identical, since this is normally a firm fixed price contract. The burden is on the contractor to make the profit and yet deliver enough evidence that the government will be incentivized to fund a Phase 2 effort to develop a prototype. All three companies made profit in this stage, with Company A making the most profit because the owner did the accounting himself. Company B and C paid some money for their accounting, which affected their profits slightly. Things began to change for the three contractors when they are invited to submit a proposal for a Phase 2 SBIR. Normally, a Phase 2 SBIR is a cost-type contract, so the government will require an approved accounting system. This will be evident in the proposal preparation and will become very evident when the contracting officer requests a DCAA audit of the contractor's accounting system. Company A, revenue is slow to accumulate since Bill is spending his time with compliance issues, and also being the PI, is not spending enough time on the contract. Thus, billings are low. The contract started late because they had trouble passing the pre-award audit, and they also were distracted with a system audit halfway through the contract. Since revenue is slow, but expenses are still accumulating, profit is starting to take a dive. Company B, after starting late due to issues passing the pre-award audit, revenue is looking okay. There are some minor hiccups, mid to late contract, as there are some errors in billing that need to be corrected. Debbie is spending her time initially doing the PI duties and completing work, but gets distracted when the system audit doesn't go well about halfway through the contract. Expenses are relatively high as the accounting firm is spending a lot of time trying to become familiar with the government regulations, which results in profits being lower than expected. Also, some payments are delayed since the invoices were not processed properly. They were rejected and delayed by the government, so cash flow suffers. Company C, revenue is looking okay. John is spending all his time doing the PI duties and completing work, so the revenue is coming in. Since Reliascent is keeping the company compliant, billings are on time, payments are on time, and profits are as expected. If you do it yourself, you run the risk of distracting your time away from the expertise that makes you money. If you hire someone that isn't fully knowledgeable in the government system, you also run the risk of delayed cash flow through improper invoicing and/or lower profits by either not taking full advantage of the FAR and DCAA regulations or underrunning your billing rates and having to give money back to the government at the end of the contract. If you hire someone to do accounting that is not fully experienced in government regulations, you end up paying for more time to get the work done, and you run the risk of non-compliance. By hiring Reliascent, the experts, you not only will be compliant, but you will make more money in the long run.
Wow.
So give us a call today.
That's perfect. You did great.
So, by hiring Reliascent, the experts, you not only can be compliant, but you'll make more money in the long run. Please give us a call today, and we'll see how we might be able to help you.